Hello and welcome. You're watching Global Lens. I'm Parikshit Luthra. Our top focus this evening. Commerce Minister Piyush Goyal is in the US for the first time since US imposed 50% tariffs on India, partly as a penalty for buying Russian oil. According to reports, trade talks between India and the US are happening at various levels. The ministerial delegation, which is expected to return later this week, has held multiple discussions on trade and non-trade barriers. Commerce Minister Piyush Goyal has said that India will buy more energy products from the US. That's not all. He met Indian origin executives, including World Bank President Ajay Banga, IBM CEO Arvind Krishna, and FedEx CEO Raj Subramaniam in New York. Goyal has also met Carlyle CEO Harvey Schwartz, Warburg Pincus Chairman Chip Kay, Blackstone Chairman Stephen Schwarzman as well. To take this discussion forward, we're now joined by Mukesh Aghi, the President and CEO of US-India Strategic Partnership Forum. Mr. Aghi, what's the current mood in Washington, D.C.? You've held meetings with Commerce Minister Piyush Goyal as well. Over the last 3 days, what's the mood? Are we closer to any kind of trade deal?
Well, the sentiment is that let's get back to business and explore understanding. While you have to understand, while the leadership, both from India side and also from the US side, is able to come to understanding on the nuts and bolts of the deal, it all depends when it's presented to the to the president, if he accepts that. I think that's what the biggest factor is. While this has happened 3 times, deal has gone to the president and he has rejected it. We're hoping this time the environment is conducive geopolitically and from a terms and conditions of the trade that it will get accepted.
Right. So you mean to say your sense is that, again, both sides have come to a consensus on the contours of the trade deal, but now it has to be approved by the president?
The work is in progress. I think they're discussing it. And the trend and the discussion points are moving in the positive direction. Have they concluded the deal? I would say no. But all indications are that they will have an understanding so they can move forward and report it back to the president and the prime minister in India.
Right. I just want to also understand from you, sir, that India today has made an offer. Commerce Minister Piyush Goyal, while speaking at the USISPF event, has said that US will be a key part of India's energy security going forward. So how has this message being seen in Washington, D.C. about India's outreach to buy more US energy, buy more US defense equipment?
Well, you have to understand, India imports 86% of its energy. And it has to buy that energy from whatever resources they can find in a cost-competitive manner. And if U.S. is willing to provide that energy to India, India has offered to buy that. I think by moving that direction, it takes away the pressure of you buying Russian oil, fueling the war in Russia. And so I think it's up to the U.S. to be able to sell that energy to India. India's put that offer on the table, and let's see how it goes from there.
Right. What would be your recommendation right now to both countries?
Well, our recommendation was let's bring the temperature down. And I think by President tweeting and wishing the Prime Minister responding, the environment is very conducive. And both sides would like to make a deal because you have a $200 billion trade happening. The objective is to take it to $500 billion. But more important is you have over 2,000 companies in India leveraging the back office, the global capability centers, and also dealing with the domestic market in India. So it is in the interest of the United States and also in the interest of India to conclude a deal so we can focus on other aspects of the partnership. You have to understand the relationship between India and the United States is not just about trade deal or just about H-1B. It's also about geopolitics. It's also about technology. It's about people to people. We have roughly around 6 million Indian Americans who are part of the economy and the society itself. So I think the relationship is much, much broader. Yes, you have challenges on the trade deal side, which should be come to a conclusion in the next couple of weeks.
Right. So is this current round of negotiations over? Is the Commerce Minister's delegation, which had come here, is the work over for the time being?
No, I think they are, while I'm talking to a meeting with the USTR team and trying to see how they can basically take out all the kinks which have been put together in the latest round itself. The sentiment is, let's find a solution. Let's find a win-win value proposition which benefits both countries. I believe having a 50% tariff on India is unjust, unwarranted, and we need to be able to bring this down to a level so at least some of the exporters from India, especially the garment exporter, the jewelry workers, which are basically dependent on jobs by exporting to the rest of the world itself, they don't get impacted. So there has to be and there is a sense of urgency to protect those jobs. That means you have to conclude the deal as soon as possible. And I believe what the indications are from the White House and also from the Mr. Goyal's team here, that things are moving in the right direction.
Is H-1B a part of the talks, Mr. Aghi? And do you believe that US will make some sort of concession on the 100,000 mandatory fee?
Well, H-1B is, yes, I think India has proposed to discuss that. But you have to understand H-1B is not a trade issue, not an economic issue. Yes, it's an issue between the two countries. But at the end of the day, the impact on India is very minimal. Basically, what you have is a country, which is the United States, trying to bring in quality people. And by imposing 100,000, if you look at, India does get 71% of those visas on an annual basis, but most of them are secured by the US companies. So I don't think it has much of an impact on the economic front for the both countries itself, because what we're going to see is the high-end jobs, their compensations will go up, and the low-end will get outsourced out of the country itself. But more important is you have around 700,000 H-1B visa holders in the United States. Their value will go up. Their compensation will go up because now everybody's going to try to grab them without paying $100,000 visa fee itself. So I think, to me, it is not a critical issue that has to be managed.
All right, Mr. Aghi, thank you so much for joining us on the program, giving us your view on the ongoing trade negotiations in the US. Let's move on and focus on the UNGA developments. US President Donald Trump and his Ukrainian counterpart, Volodymyr Zelenskyy, held a bilateral meeting at the United Nations General Assembly. Zelenskyy called it productive, after which Trump appeared to dramatically shift his stance on Russia. Shortly after, Trump posted on social media saying, and I quote, "After getting to know and fully understand the Ukraine-Russia military and economic situation, and after seeing the economic trouble it is causing Russia, I think Ukraine, with the support of European Union, is in a position to fight and win all of Ukraine back in its original form." End of quote. That statement marks a sharp departure from the White House long-held position that Kyiv would be unable to reclaim the roughly 20% of its territory occupied by Russia since 2014. Trump went further, writing, and I quote again, "Russia has been fighting aimlessly for 3.5 years, a war that should have taken a real military power less than a week to win." He suggested Moscow was a paper tiger. The Kremlin swiftly hit back. Spokesperson Dmitry Peskov dismissed Trump's remarks, saying Russia is not a tiger, Russia is more closely associated with a bear. There are no paper bears. Russia is a real bear. He also rejected claims that the Russian economy was struggling. Meanwhile, Zelenskyy thanked Trump for what he called strong cooperation with the US. Speaking to reporters, he described Trump's shift as a big shift, a really big shift, adding that the US president now seemed more aware of details on the battlefield and that American intelligence appeared aligned with Ukraine's view. He also said that he would be ready to step down once the war with Russia ends, stressing that his priority is bringing the conflict to a close rather than seeking another term in office. We're now joined by Daniel Fried, former US ambassador to Poland and distinguished fellow at the Atlantic Council. Thank you very much, Ambassador, for joining us. How do you think Russia is going to respond to the overtures of US after this meeting?
Well, Russia has already responded with sarcasm and dismissing Donald Trump's latest comments. More privately, I think the Russians are apt to be concerned by what may be, but not necessarily is, a stronger U.S. position in support of Ukraine. The issue that interests me is less what Trump says and more what Trump does. If his words foreshadow action to put more pressure on the Russian economy and more pressure against Russian aggression against Europe and NATO countries, that could convince Putin to back off and negotiate an end to the war. Anything short of U.S. action is going to lead Putin to conclude that Trump's words are only words and he can outweigh Trump or wait until Trump changes his mind. But if Trump follows what he said this week at the UNGA with action, that could be a game changer. I think Europe is ready to support American leadership. Europe is ready to carry a lot more of the weight in support of Ukraine. But the U.S. has to be part of this. And so far, the pattern has been that Trump tiptoes up to the line of additional and decisive action to push Russia into negotiations and then fails to take it. I'm glad for the improvement in the U.S. tone, but we're not at the decision point yet. I hope we get there very soon.
Right. You know, Zelenskyy has told the UN that you need to stop Russia now or Putin will expand the Ukraine war wider and deeper. We saw those military exercises over Poland as well. What is the worry of a larger European war as a result of what's happening right now?
I think that Putin is in an aggressive mood, and he wants to push Europe and push NATO by seizing its vulnerable points. I think that Putin believes he can intimidate the West Europeans into retreating and then pressure the Baltic countries and even Poland, but particularly the Baltic countries, so that he weakens NATO's protection of them and even opens the way in several years to potential Russian action against them. Putin wants to destroy NATO, and he thinks that because of uncertain U.S. leadership and what he may think are rising nationalism and anti-Western politics, even in Western Europe, such as Germany, that he can get away with it. If he's wrong, he will back off. But Russia will not back off, Putin will not back off unless faced with sufficient strength from the West. So much depends on what Trump is going to do.
Do you expect any sort of breakthrough or ceasefire? Is the pressure on Putin going to work anymore?
Well, there's not enough pressure on Putin at the moment. So from Putin's point of view, why should he agree to a ceasefire when he believes there is an opportunity for him to actually win the war in Ukraine, to frighten, intimidate the Europeans into backing off of Ukraine and convincing Trump to abandon Ukraine? As long as Putin thinks he can do that, he's going to continue the war. If we want Putin to back off, we need to put additional pressure on Putin so that he recalculates the situation. Putin is behaving as a rational actor within his own nasty frame of reference. And we, the West, have cards to play. We can put additional pressure on Russia. We've just chosen not to do it. And the we in this case is largely Mr. Trump, because he has not used all the tools he has available. Or if he has, he's used them clumsily, as against India with the tariffs because of Indian purchases of oil, which was a clumsy move, to say the least.
All right, Ambassador Freed, thank you so much for joining us on the program, giving us your view on the Russia-Ukraine talks, Zelensky's speech at the UN, and about the change in stance that Donald Trump has taken for the moment against Russia. Let's see what happens in the war in the days to come. Time for a break, but up next on Global Lens, the Indian market underperformed its global peers in 9 months of 2025. Foreign investors pull out $21 billion during this period. We will speak to Raj Bhatt of Elara Capital Group on the investor sentiment and whether an India-US trade deal could improve the market sentiment as well. That's coming up on the other side. Welcome back. Let's put the spotlight on the global market action. Stocks on the Wall Street edged lower even as the US economy expanded at 3.8% in the second quarter, beating estimates. The figure is a stark contrast to the previous GDP number, which was a contraction of 0.5%. A higher GDP reading lowers the probability of the Fed cutting rates during its October meeting. Meanwhile, US jobless claims for the week ended September 20th, and this was well below estimates. And this was the lowest level since July. This provides some relief to concerns about labor market weakness. Remember, earlier this month, the Fed, while explaining the rationale behind the rate cut, cautioned that downside risks to employment have risen. Now on to the Asian stocks, which traded mixed today. Indian benchmark indices slipped for the fifth straight day, Nifty closing below 24,900. Japan's Nikkei notched fresh record highs, continuing its gaining streak for the sixth day. Meanwhile, South Korea's Kospi, Hong Kong's Hang Seng and China's Shanghai Composite ended with minor losses. Indian markets have seen foreign investors pull out over $21 billion in the first 9 months of this year. India's markets have significantly underperformed most of its global peers, rising only 1 to 2% in dollar terms during this period. In comparison, US equities gained between 10 and 15% on an average. Most Asian markets gained 15 to 35% in dollar terms, and European markets posted gains between 18 and 30%. The Nifty has also underperformed commodities. Gold has surged around 43% in 9 months. Silver jumped by over 50%. Copper too left the Nifty far behind with gains of 18%. The net outflow from India is also the highest among emerging markets so far this year. In this aspect, India is followed by South Korea, which recorded outflows over $19 billion. Will uncertainty over the India-US trade deal and Trump's crackdown on H-1B further impact global investor sentiment towards India? To discuss this, we're now joined by Raj Bhatt, Chairman and CEO of Elara Capital Group. Mr. Bhatt, thank you very much for being with us. Why are Indian stock markets underperforming as compared to their global peers? That would be my first question to you.
India, we have to see as an emerging market first. So the comparison should be with the emerging markets. And India has consistently outperformed over so many years. So valuations were slightly richer. That's one reason. Second reason is that the Trump's tariff, of course, he slapped a 50% additional tariff on India. And the third reason is the visa fee, $100,000. So sentiments are turning negative for India. But, I see this. And also other reason for this is the China is outperforming because there's a lot of news about China's success in AI, and they're doing their own chips, technology. So all their technology companies have been doing very well. So money is moving into China also, and Japan has been doing very well. So money, considering Japan as a part of Asia, the money moving in Japan. So these are main reasons for dampened sentiments towards Indian markets. And
Mr.
unless
Bhatt,
we get some clarity.
If I were to ask you about the trade deal, if India and the US in the coming days were to have a trade deal which brings down the average tariff rate, will you see an upside? Will we expect an upside then?
100% certainly. But the question is, where are we going to get a trade deal? Because I'm not sure we are there as yet, because right now the tensions are high, and the Ukraine-Russia war is playing a pivotal role. And so, trade deal, how long will it take? I have my doubts that it's going to take more than what we're thinking at the moment. So if the trade deal happens, yes, we will see huge change in sentiments towards India.
Right. Now, looking at the current environment, which would be some of the sectors in India you are most interested in or excited about?
I'm looking at domestic sectors because globally, you had quoted that US GDP growth of 3.8%. It's basically because we had last quarter contraction. It's more to do with import exports because we had higher imports last quarter because of tariffs. So imports were lower, and that's why we had GDP growth. So I don't see US performing very well, Europe performing very well. We already stagflation in many European economies, including UK and France. So I think domestic demand-driven sectors, and I like chemicals and agrochemicals, basically sectors where we see huge upside,
Right.
and anything to do with tourism, hotels, etc., good.
All right. Now, when you speak about the global picture, how much would you be investing in India compared to other markets globally? Which are your priority areas or priority markets for investments right now?
See, we are overweight China, and we've been overweight China for some time. And the valuations are very compelling. If you look at the valuations of top Chinese companies like Baidu, Alibaba, JD.com, the three I'm naming where we have investments. I mean, they are very, very compelling compared to US and Europe and even India. And we have some investment in Japan, but not significant. And we have on commodity sector, we have investments in Brazil, mainly two companies, Petrobras and Vale. And India is our India fund is obviously has to be invested. That's invested in India. Will continue to invest, and we see a lot of people, inquiring us about India. So India demand will continue, but we have investment in India obviously through fund, and which will continue to hold.
Right. Just to also ask you about precious metals, what's your view on precious metals right now, your outlook going ahead?
They've done very well, and it all depends on the uncertainty of the war. If the Ukraine-Russia war continues, precious metal will keep going up. And so it's I think this war dependent. If we find solution to the war problem, then obviously precious metal will decline. But as long as we have uncertainty, the precious metal will keep going up.
Right. Just to ask you, at what point or at what level in the markets would you start looking at investing or increasing your exposure to India?
No, India, as I was saying, we are investing. We have investments in India anyway. But if I was to see a turning point for India, I think it's a good point. I mean, we have companies in India. I don't want to name the companies in India, but which have very attractive valuations and good growth rate. But there are pockets where India valuations look very rich. So I think it's more of a stock picking market in India at this moment. I'm not looking at index-based investing. We have a lot of Indian companies who trade in US anyway. You can invest directly because India is a regulated market. The investment in India has to go through FPI, and we have an India fund, dedicated fund, which we have a team which looks after. I'm not involved in that. We look either through buying through bonds, convertible bonds, or through securities which are trading in NYSE.
Right. My final question to you, sir. We've seen income tax relief in the budget. We've seen the RBI cutting rates. You've seen a GST reduction at well. What do you think after this will really boost the sentiments in the market?
The idea the government cut these taxes was to boost the demand. And when the prices go down, demand will go up. And I am positive that whether it's going to offset the shortfall in the tax collection, that's a question mark we will figure out later. But definitely there'll be increase in demand from the consumer due to reduction in prices. But degree of it we don't know today. But it's positive for the companies.
A quick look at other stories. We are tracking former French President Nicolas Sarkozy has been sentenced to 5 years in prison. This after he was found guilty of criminal conspiracy over efforts by his close aides to secure funds from Libya for his 2007 presidential campaign during late dictator Muammar Gaddafi's rule. The Paris court has acquitted Sarkozy of all other charges, including corruption and illegal campaign financing. More than 1,000 Indonesian school children fell ill after consuming free lunch provided under President Subianto's multi-billion-dollar free meal program. Over 80 kitchens have been shut after the latest set of poisoning, according to a local media. Since the launch of the program, over 6,400 cases of poisoning have been reported. Chip maker Intel has reportedly approached Apple for a potential investment in the struggling chip maker. Bloomberg News reported that the two companies explored ways to deepen collaboration through talks, and talks remain at an early stage and may not result in a deal. This comes days after Nvidia announced a $5 billion investment in Intel. Starbucks has announced a $1 billion infrastructuring plan that will involve closing some of the North American coffee houses and laying off about 900 employees. This is the second round of layoffs under CEO Brian Niccol's tenure. About 1,100 corporate workers were fired earlier this year. Starbucks identified a number of stores where it couldn't see a path towards profitability during its review and decided to close them. 3 detainees were shot at an immigration and customs enforcement facility in Dallas by a gunman. 1 has been killed and 2 others were critically injured after the gunman shot indiscriminately at the facility. The shooter, who was found, was seen bearing an anti-ICE message. The FBI dictator Kash Patel shared a photo of unused ammunition from the scene with 1 casing marked anti-ICE. On Final Cut this evening, Super Typhoon Ragasa is heading towards Vietnam after leaving trails of destruction in China, Taiwan, Hong Kong and Philippines before weakening into a tropical storm. Ragasa caused widespread flooding, damaged infrastructure, uprooted trees, claiming at least 25 lives in Taiwan and the Philippines. Cleanup operations continue in China and Hong Kong while Taiwan searches for the missing. We leave you with these visuals. That's all for today on Global Lens. Goodbye and thanks for watching.